Welcome back to the second hour of the Big Money Show. I'm Brian Brenberg, along with my co-host Taylor Riggs, Dagen McDowell, Jackie DeAngelis, and join us for the hour, Prairie Operating Company EVP of Market Strategy, Lou Bassanese. While inflation cooling in April, grocery prices seeing their largest decline in nearly 5 years, gas prices falling for the third month in a row. President Trump's labor secretary weighing in on X, writing, Americans are breathing a sigh of relief. Every dollar is going further, and workers are able to keep more of their hard-earned paychecks. Okay, Lou, so let's talk a little bit about those inflation numbers. Now, I will quibble a little bit with that statement. Your dollars aren't going farther. They're just going less far at a decreasing rate, which is still a good thing.
Yes, exactly.
But it's a little different than your prices coming down. But I saw that inflation print this morning. I thought, that's good news. We should be celebrating.
It's very good news. I will say, I'll give a little disclaimer, right? This is the first time there could be any tariff impact, but if we really look at it, businesses could still be selling off pre-tariff inventory. We want to see this trend continue, but I tell you, it's a huge sigh of relief for President Trump, and even more importantly for Jerome Powell, because Jerome Powell was in a precarious situation. If inflation was reigniting because of tariffs and the labor market was weakening, we get the dreaded stagflation. So I think from all sides, and this is why I think you see the market over the course of the day start to react more positively, now the stage is set for a very orderly reduction in interest rates in the back half of the year.
Taylor, data, what did you make of it?
I'm with Lou. I was a little, I don't want to say frustrated, but if you're a viewer at home and you don't understand the ins and outs of the way CPI works, all you have been hearing is tariffs are inflationary. It's happening immediately. And yet we don't see it in this report. And to your point, yes, the average economist said that inventory is about 3.7 months on hand. So you wouldn't start to see tariffs until later. But from the consumer who's been told inflation's here and it's impacting your prices immediately and all hell is breaking loose, then to just read a note that says, oh, but tariffs weren't going to show up in this report anyways. The tariffs was going to show up later. I'm a little frustrated. I wish the economist would have been more clear to me and to a consumer at home in saying it won't show up in March. It won't show up in April. It won't show up in May. It may show up in June or July or August. That being said, Brian, the underlying data was good. You know me, I come with the detailed components of CPI going back 84 components to 1998.
Are you going to list all 84 right now?
Well, I think we would have to blow the break.
Pick
and
your
I don't think you want to do that.
Pick your
it's apparel, down 8%.
Bingo. 31% of those 84 components that will not be listed separately only showed 1 month annualized gains to above 5% in April. That is the only 31%, down from 40% in March. So the overall components, fewer components are growing at a rate over 5%. To Lou's point, that's really good news. I just don't like the way it had been phrased, that me as the consumer, I was supposed to panic the minute April data came out.
Well, okay, so let's talk about the panic thing that was around tariffs. Dagen, last night you talked to one of my favorite people on earth when it comes to economics, Art Laffer. Here's what Art Laffer had to say about the deal.
Doing the threat of tariffs with China was perfect, absolutely perfect in bringing China to the table to negotiate. China desperately needs us, Dagen, and we desperately need China. They need us more than we need them. But I think what he's done in this is absolutely brilliant.
So what do you think about that in relation to the inflation story right now?
Well, the tariffs were never going to be inflationary. I've said that repeatedly on this very program. Tariffs are like a value-added tax. How's a tax inflationary? It's not. Discourages consumption. And looking at the data so far under President Trump's time, and this is a hat tip and a salute, the good kind, to E.J. and Tony, inflation-adjusted weekly paychecks up 1% under President Trump's second term. They were down 4% during Joe Biden. Average energy prices down 1.5% since January. Long way to go still in reversing the damage done to our energy independence and sector, but we're on the road to that. The drop in food prices was driven by declines in meat, poultry, fish, eggs in particular, seeing the second largest drop on record. Inflation overall during President Trump's second term is running at 1.6%. Enjoy it. Relish it. Biden's first 18 months, it was 8.6 annualized. And then in his last 30 months, it was about half that rate. But again, inflation and runaway inflation was the norm under Joe Biden because he is an economic and financial moron, along with everybody who worked for him. President Trump, no. And he actually gives a damn about what people pay and what people earn in this country.
And, you know, I was a little bit wrong about prices coming down, Jackie, because some grocery prices did actually come down in the month-over-month numbers. Dagen mentioned the meat, poultry, fish, eggs category. Eggs, the big one there. Dairy, fruits and vegetables. I try to eat a lot of fruits and vegetables, so that's very
You don't lie.
I eat a lot of them.
Is that a Kit Kat over there? I don't see any
It's a
bananas.
vegetable Kit Kat. Jackie, there is a little bit of relief here, but even the slowdown in the rate, I think, is meaningful to people who have dealt with rates much higher than this in recent history.
Well, yes, and so I don't want to discount it, but at the same time, there's not an inflation report at this point that's going to like gut punch me or move me in any way after experiencing 9% inflation under Joe Biden, whether it's a drop or a rise, you know, even if it's a slight rise because of the perceived threat of tariffs if it were to have an impact. So I'm not really looking at these reports, but I'm looking at the details. I'm glad that Dagen brought up the wage issue. I think that's really important for the prices that are not going to come down. Remember, inflation, as you mentioned, is the rate, but for prices that are not going to come down as a result of going up, people need to earn more to be able to keep up. Yes, there's a long way to go, but on some of those grocery prices, even though they're small reductions, that is a step in the right direction because food prices have been absolutely killing people. On the energy story, I paid $2.50 in New Jersey for gas, which was a very, very low price in an area, by the way, that, you know, typically relishes charging $3 a gallon just because. So I thought that was a very encouraging sign. We are going into the summer driving season when the prices typically go up, but in the fall, we should expect those prices to come down once again. So, I mean, I think we're on the right track, and this is all good news.
Lou, you know, on the tariff front, and just prices for a second, we saw everybody buy a lot of inventory kind of leading up to the tariffs, right? And they're working through that now, maybe. With this latest pause, are you expecting there to be another huge surge in kind of bulking up inventory to deal with whatever may happen after the 90 days?
I don't think so because China blinked meaningfully. They announced stimulatory measures last week, came to the table because they're in dire jeopardy. 14.7% of their exports come to the U.S. If these tariffs were in place, they lose 70. There's a 77% drop in exports to the U.S. They need this economically. I think businesses are smart to that, and they're going to say, hey, there's real conversations going on. There's a real 90-day pause that's going to come to an outcome that's favorable. I'm going to absorb the impact because typically businesses will absorb 50% of a tariff or inflation impact before they pass it on to the consumer. I think they built that buffer, and you're going to get to the other end. We're going to have a deal, a definitive deal. It's going to be business as usual, but better, because of the way that President Trump has negotiated this. You
know, we might get a deal, Taylor, but do you think the train has left the station for a lot of these businesses in terms of how they're going to plan supply chains going forward? Like, short term, we're still going to buy from China. But it just feels to me like most businesses in America right now are probably asking the question, maybe we can rely on China for another 6 months, 12 months, 18 months, but we got to find something after that.
I think for any CFO, it comes down to risk reward. The reward for moving out, the risk, well, how do I put this? The cost